Hello, traders. It's 8:01 a.m. Chicago time on a Tuesday, the 24th of November, 2020. This is episode number 1886. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at risk-on sentiment in what is our, let's pull this up. We have risk-on sentiment today. We do have some news from on a couple of items that are pushing things higher. One is the General Services Administration, the entity within the government that controls government assets, has been given the go-ahead by the Trump administration to begin coordinating the transfer of power to Biden. That's good news. That to kind of remove some conflict or uncertainty. In addition to that, President-elect Biden has selected Janet Yellen for Secretary of the Treasury yesterday. That gave the market a bit of a pop. Also, EU has reached a deal for supply of 160 million doses of Moderna COVID-19 vaccine. U.S. Stock market, U.S. stock futures mirroring global share markets as the form will go ahead for U.S. President-elect Joe Biden to begin his transition, brightened in November, already boosted by COVID-19 vaccines. The dollar and gold were prices were in the red as optimism over development of coronavirus vaccines drove investors to riskier assets. Oil touched its highest level since March on hopes of a quicker recovery in economic growth and fuel demand, and so on. And there are other pieces of news, but that's really it. We're looking at Lagarde speaking today at 9 Eastern. S&P Case-Shiller, which is a medium impact figure, at 9 as well. Consumer confidence at 10. Fed's Bullard at 11 and Fed's William at 12, as you see in front of you. Currently, the overnight inventory is 100% long in the S&P, and the overall sentiment is risk on for today. So, and then on the right, the gray box you see there gives you the current ranges based on 1 sigma. What we would consider to be a normal range for RTH, looking back 252 days. So the ES is within a normal range if it attains 57 points in the RTH session, and Q 238, RTY 39, the Dow 480 points, and crude $1.60. And then there's also the harmonic rotation, which is 1 sigma or one standard deviation on a 1-minute bar chart going back 20 sessions in the RTH session. As you can see there, 8.25 points, which is pretty high. That requires a stop that's fairly wide in the product. The Nasdaq's 32.5 points, which is pretty insane. But as you could see from the heat map, that money's flowing into the indices and out of metals and treasuries, and it you have a summary of what's happening with the currencies and so on. So this is a sheet put out by Convergent Trading, which is an entity that I founded and a community that I've founded with others to help traders who are focused on becoming career professionals to grow as traders. So that's that. Let's jump into our review segment. Of course, the purpose of that sheet is to make the review process faster, and it'll just get faster and faster. Yesterday, the primary scenario was looking for a dip into 57. I outlined 57, 48, and 41 as the key areas below. 87, 96, 00, and 08, if you recall, has been on the board for several days now. These are the key areas. The expectation was for the market to pull back to around 57 or so and then push back up to the overnight point of control. The secondary is a push through the overnight point of control, through the overnight high, up into the 90-92 area before it dips, with 87 being the big area to watch out for a reaction. And here's what actually happened. We immediately open it in what looks like an open drive, with the open being the low print. Delta is pretty strong, so we see an open drive right off the open. And where do we go? We go to the 87. That's the 87 right off the bat. And then what it does is it puts in a higher high by 3 ticks. It pulls back right to the mid, pretty sweet there, and pushes a higher high to the 35.88, and then, which was unexpected, and then it fails all the way right through. And where does it go? It goes right to the prior day's point of control, that pink line. Pulls back into the opening swing and then pushes through. Where does it bottom out? It bottoms out at the 48.75, if you recall, the 48. This is why we need to know the areas. We need to know the levels. Yes, I can draw lines on here all I want and say it does this, but really what matters is what I've been drawing over here, which is the key turnaround levels. So what we did is we moved to 87, tested that, and failed. So we didn't quite do a scenario 2 and hold up there. We actually failed through. And once we failed through, we went to 57 and 48. So check those off. And then in the overnight session, which I'll cover in a minute, it turns around, pushes to the high. And where does it go overnight? What's your overnight high? 08. I'm not saying or bragging that I know something that you don't. This is simply looking at the confluence of levels and the volume profile and how the market traded in various areas of acceptance and rejection to come up with these areas. So that's what happened overnight. We did not really, the overall play did not match any of the scenarios really yesterday, but it did still cover the same map, right? The 57 was tough. Once it broke through here, if you're a Convergent member, if you might recall in the Head Trader channel, I said shorts, hang in there, hang for 57, expecting a test of 57. Where does it go? It goes to 59, pulls back right to the mid, and then continues down and gets through the 57, consolidates at the 57, which is expected. This is an MC point of control, so we expect some consolidation, acceptance in this area. So we ended up building another high volume node at the 57 area. So we have two kind of funky looking distributions, but we ended up building on top of the 57 before going to 48. So the auction to me is quite orderly, tough to hang in because it tends to do a lot of these V-bottom type formations, but overall it traded as expected. So we ended up finishing in the middle of the range on top of the point of control, but above the mid-end VWAP. We finished bullish with the point of control being shifted higher towards the upper end of the prior day's range. And one of the key things, of course, to remember is that we broke the one-time framing down. We took out the high, so the one-time framing down on the daily is finally taken out. And that brings us over into the day session profile. And I talked about this yesterday. Let's zoom in a little bit. So we've had, again, I keep repeating this every day because it's important. We've had a bottom, then we trigger off one-time framing up on the weekly, one-time framing up on the weekly. We hold one-time framing up, but we don't take out the high, but that's okay. The one-time framing on the weekly is positive, is to the upside because we keep putting in higher lows. And what I talked about is last Monday on that Moderna news, we put in a high, but the next days we put in lower highs, lower highs, lower highs, lower highs. This was an inside day. And I talked about, hey, watch out for this high being broken, because if it does, then where are we likely to go? 3608. 3608. Right? We talked about this yesterday, talked about this Friday, talked about this Thursday, that the break of a one-time framing down is likely to push us through the low volume node from last week and the week before, two low volume nodes here. And if we do take out the low volume node, then we are looking for it to push into the next high volume node. So the market moves from high volume node to low volume node to high volume node to low volume node, and so on and so forth. And so we expect to test at 3608. We expect it to kind of chop around in here before we challenge that 29.5. We have a single print up there, and we also have a double top up here at 16.25. Those are all up for grabs today as we gap up. So pretty important day today. Here's the overnight session. The overnight session, we see 188,000 again, 100%. The inventory is 100% long, as covered in this chart here, 100% long on the overnight stats, and we have 188,000, 189,000, which is in line. But we have the high at 3607.75 against the 3608 point of control. And we have the local double top at 16.25. I expect that to be challenged. It's a weak high. I expect that to be broken. If it does, I expect a spike into 20, and then we have the 23 above there, and then from there we're looking at the weekly high at 29.50. The overnight looks like a P-shaped profile, short squeeze. We move into a higher territory, and then we balance for the rest of the session. We see that VWAP's caught up with price. Mid is still well below at 91.50. We're above the century figure, and we're trading around the century figure. So expecting this morning's trade or the open to be a little murky, a little choppy as we head into the Thanksgiving holiday. Which reminds me, don't forget that Thursday, Friday are Thanksgiving days here in the U.S. Both days are half days, so they close. I think the market closes at 12:30 on Thursday and Friday or something like that. I think they have different times for different days. That's 12:30 Central. So be prepared for a very, very quiet session. Also expecting the market tomorrow, Wednesday, to go into a coma right after the European close, which is at about 11:30 Eastern. So just don't forget that this is taking place. So that's pretty much the review of it. Let's take a look at what's expected for today's session. So I set up the chart here. Let's squish it together so we can see what we're doing here. Okay, so what are we expecting for today's session? What is going on here? This is the clean screen. This is the current screen. Here we go. So what are we looking for today? We are really in a big zipper here. We had our first push into 35.96, and then we had our pullback to 35.96 right there. 35.96. This number carries over from the gap low, from the gap zone high, or the range low of the gap day on the Pfizer news. The gap bottom, the gap zone bottom is at 90. This is that 90 to 96 range. We're in that area. So we tested 96 immediately on the Yellen news, and then we came and tested it from the top. We're holding steady. We're holding a nice zipper up here. We're consolidating against the overnight point of control and against the 3600. The expectation is for a dip down. The inventory again is 100%. 100% long. I'm expecting a dip down, a test below the 3600, and then I'm expecting an impulse up that takes out the 3608. I'm expecting a push into the naked point of control at 3612, consolidate in here, and then slowly take out this the double top at 3616. And then walk ourselves up into the 23. That's the main idea behind today. We're looking at a gap and go situation with a minor reversion or minor responsive selling on the open. The secondary, we open, we immediately squeeze higher into that 12 area, consolidate for a bit, and then come back down into the open, and then test that 96 again and push back into the 87, 88 area below, consolidate in here before we bounce into the close. In either case, we're looking for a higher low and a higher high, and we're looking to trigger off one-time framing up on the daily in line with the weekly. This moving, scenario one, moving with the weekly, is likely to carry a distance. You know, you align with the higher time frames trend, and the winds tend to carry your sailboat farther. So I'm expecting this to continue to push higher. Okay, delta is positive, but not by much, and that's where we are. Good luck today. We'll keep it short and sweet. Good luck today, and I'll catch you tomorrow morning, and then I'll be gone Thursday, Friday. Okay, good luck. Take care.